Hey, it's Matt with PriceActionTradingSystem.com, and it's Tuesday. It's February 6th. This will be our chart lesson for the day. And again, very high volatility, uh, very volatile day, very high volatility. Um, Another 170 plus point move, I think, today. We were as low as, let's just see where we were. We were as low as 25. I just call it 25.29, and as high as 26.29. So, or I'm sorry, 26.99. So, um, you can do the math there. Um, Pretty close to 170 points there. But anyway, uh, overall, this is a range day still. Well, I take that back really because your overnight highs and your overnight lows are here. This is more of an uptrend really, but there's a lot of sideways action here. Um, Actually, your overnight high is right here, not over here. And we spent early on, it looked like we were just going to chop around right in this midpoint of the overnight high. But when we turned up from here, then you want to consider a possible measured move. So you measure that first leg, you look for leg two, and that gives you a target of right in here, which the other way I measured it were these equal distance on these support and resistance areas here. And you can see that played out just as well and probably just as accurate, if not more accurate. But that would have been my overall target for the day. We didn't quite get there. As I said, I measured. It was fairly easy to find these two lines. And then when you went up, of course, it fits right off the top. Or you could have just found the support here and then put one here and then found the equal distance, and it still would have got you to the same place. So there's a couple of different ways to get there. But once we broke higher above this high, then you just want to measure those distances and look for a possible measured move, and that's what we got. We actually went a tick or so above that. So there was two different ways to look for your measured move, and I'm gonna get those out of the way. There's probably a channel in here. You could probably look at this as spiking channel. I drew the channel, but it didn't really help you any. You're better off to use these shorter term channels and trend lines, and that's what I used. But you can see the day here. What I'm going to do, as somebody else suggested, I'm just going to talk about the first hour. I mean, look how many trades there were. Only trades I marked were the first hour. Actually, I take that back. A little more than the first hour because I came in at 7. So from 7 and then the first hour of the regular trading. So 7 to about 9:30, I marked the trades. And you can see there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 in the first hour alone. And several of these would have caught you a nice runner. And on really strong trend days like this, you definitely want to hold your runners. And there's other short-term trends in here, so you could probably argue for some more, even some additional trades here. I'm just going to show you the ones that I liked that were fairly easy to see and fairly straightforward. So coming in, there was a trend moving down over the overnight. We got a break, and then we headed to a new low, found the bottom, and reversed. So when I came in, you had this little shorter term trend working down, trying to make a new low after the break of this larger channel here. And so that's where we're going to pick up, and we'll talk about, I'm going to back out a little more. We'll talk about the trades from there to about 9:30 or so, and then we're going to wrap it up. But notice that we're working down. You draw your trend line off these first two swings, but better yet, you got a new high here. This swing high is higher than this one and this one. So you got a new high. You go back first entry, go down again. It didn't actually tick higher here, but it's a second attempt to come. So this is like a failed second entry long, and big bearish bar. I actually would have went short below this bar right here. You could have waited on this one, let it break low, and dropped your limit order, and still got filled. And you're just looking for prices to test this low. and maybe make a new low, but it could keep going the way things have been the last couple of days. Don't discount anything. So, but notice what happens. We bounce perfect double bottom there. We try to go lower once. We try to go lower twice. We fail. It actually goes out this side, back up and goes out. I like going long. You can go long above that bar, or you could have had your stop one tick above that bar already in there. So you got your double test of this low. You got an overall double bottom. You got a failed second entry short. You got a sure thing here with this strong support level right here. I like going long right there. And a lot of times you'll catch the low of the day here. And guess what? If you take this one trade, of course you can't take this all the way because it does come back. And this is how efficient this market is. There's no freebies in this market. It comes back just enough to get all the stops from entering down here and then goes straight up from there. And that's pretty common. So, but there will be other opportunities here to catch some entries. So it takes off, and really you got a double bottom here. So you got a failed second entry long here, but we had a close outside this trend line. So, and there is some resistance right across there. So I wasn't crazy about that one. Of course, it does run up to the new high, makes a new high, makes a lower high here, but that bar is too bullish. There's your failed second entry long. So now you got to assume we're probably going to head to the bottom again. This is a very neutral bar, but it doesn't matter on that failed second entry long. We do have a close outside this possible trend line right here, but you got enough room to get out. So, and the odds are we're probably heading lower. And there could be another trend line here. It doesn't turn out that there is, but you always have to watch for that off that next swing. I would go ahead and draw that line just in case. We'll see what happens when prices come back, but you can see they just go right through, so it's not valid. Never gets confirmed. And off to the races on this one. And then we bounce right through the EMA. Notice how neutral that bar is. That should keep you out of that. You could have gone short here, but you know, we should be headed back to the upper side. We didn't quite get to the low side, so we could be going lower. So this is one where you're probably better off just to kind of wait, because we're kind of in that no man's land. Look how flat the EMA is getting. If you'd gone short there, it would have worked. You know, I'd probably, like I said, I would skip it just because of the location. And then you get a second entry long here, but you don't have anything to confirm this trend line. You don't know if this trend line's any good. Again, we still haven't gotten to the bottom, so you just never know. And off it goes. It is a second entry long. You can see that trend line, then you get a little break, and then off it goes again. I like entering this one because look at that low. There's your first entry. You go higher. There's your second entry, and it does come back and test this line up here and then bounces. So I like that entry right there. It's a failed second entry short. There's two legs up. It's a breakout pullback long. There's a lot of reasons to like that trade. And if you catch this one, you can ride this all the way. And I mean, when I say all the way, you can ride this a very long way. I probably wouldn't have exited till it broke up here. I don't think I would want to ride that out. I'd just take my exit and then look for a new entry. But that's a great trade. And then we're just kind of working back across to this line. There's some arguments to try to want to go long in there, but again, you're probably headed back over to here. So just wait. And you actually get a second entry long right here. But this is your signal bar, so I don't think it's worth risking. It does confirm the trend line. There is a little short-term trend right here, and you get the close outside, but you don't have a new low. And it's right there into that line, that support resistance line. So I think what you want to do is let it test it from above, and if it does and then goes on, then you enter, and you get that right there. It breaks above, comes back, tests it, tests. So now you got the trend line, the EMA, and the support resistance line holding. Go long right there. And again, if you catch this one, you can ride this the rest of the way up. You basically got a new low there. It's lower than that swing low or that one. So first entry short, second entry short. This is really a double bottom. So that was a failed second entry short as well. But this is a double bottom, so you can count it new. So first entry, second entry, it fails. takes off on a failed second entry long. Comes back to that trend line again. At this point, every time it comes back to that trend line and I get an entry, I'm probably going to enter. Because this thing's taking off again. And you don't know how far this trend will go. It's a strong trend. I mean, look from down here how strong that is. And we just keep, every time it comes back to that trend line, it bounces. And so every time it does, I'm probably going to go long. This is just a first entry, but at this point, I'm not really that concerned. And notice what happens. It finally gets a break. There's no fake outs or anything there. It just sells off. Comes back. It kind of gets in a little trading range. But notice what happens. There's a first entry short, and there's a second entry short that fails. But this is a failed break out of that little trading range. A failed second entry short. We're probably going to retest this high as strong as that trend was. So I like going long there. And at this point, you got to be careful about here. So when it pushes through and pulls back and tests it and gives you a higher low, I like going long there too. And at the very least, you would expect that you're right here. You probably get a measured leg, and you can see we actually went a little further there. Actually, that looks like, yeah, one tick further. But I would also measure this one and measure from here, and you can see that's a perfect measured move to the tick. So you got it two different ways there. So I like that one. And of course, now you've reached this upper, and that would have been the other thing. I would have been looking for a target. I had those lines drawn in from here, and then I drug it up there, and that would have given you a measured move that way as well. But now we're headed back down. We came off the upper side. We don't get to come back to the trend line and confirm it till here, and we actually get a little break there, but when it turns down, I like going short right there, because you can treat that. You actually had a failed second entry long here, but this is just another attempt to go higher, and it fails, and how bearish that bar is from underneath the EMA. I like that just for a retest of this, but it just takes off. And you do have a new high here. There's a little breakout pullback short right here that also is off that trend line. But I'm not crazy about that one. But when it comes back again and closes right inside that line and so forth, and so bearish, at this point, you're probably headed down to this line. And notice how it just shoots right through there and goes lower. But it quickly comes back to that line and tests it on both sides a few times. So I like going short there. And you could argue for that one, really. Like I said, you could argue for a lot of these that I don't have marked. But I'm just picking out the fairly obvious ones that fit the rules easily, that are easily spottable, that you're not taking a lot of chance. Because you don't want to take a big gamble on days like this. Like here's a perfect two-legged move back up, but you don't have a very good signal bar. You bounce here and get a lower high, but again, not a very good signal bar. You get a failed second entry long here, and you actually get a higher low here, but your entry would have been one tick below that bar. So I don't have any problem with that one because it's a failed second entry long. You're testing that support resistance from underneath. You're testing the EMA from underneath. That's probably headed lower. So there's one that I didn't mark that was a very nice one. And of course, we bounce and come back. I didn't like this first one off the trend line, and that actually set that trend line. These two right here, and this was the first confirmation of it. But you didn't have a break of this short-term trend line. So when it opens and goes up and fails and turns back down and gives you another one inside that line, I like going short then. And unfortunately, this one comes back and get your runners, so you don't get another chance. And that got you into the 9:30 hour. But notice how we're making a lower high here each time. That means we're probably going to break lower. I wouldn't have been averse to entering right there. You're better off to wait on a breakout pullback short. You get it right there. It's fairly neutral, but it comes back here and gives you another shot. Again, it's fairly neutral. But the thing about this one is, too, notice that's a new, actually it's not a new swing high. I thought it was, but it's not. So that's, I was going to say this is a failed second entry long, but that's not a new swing high. right there. So that is not a failed second entry long, but it's really multiple attempts to try to come up. It's just too bullish a bar, so I'm not crazy about it. But I didn't mark anything after that. Notice we just kind of continue to work up and down. You can trade this both ways, and we're just going sideways here, up and down, up and down, up and down. And you can see these lines coming back and forth into play, these support and resistance lines. And we ended up closing up for the day. Looks like we're backing off of that a little bit, the high or the close. But yeah, overall, this was an uptrend day with an overall kind of sideways neutral kind of bias to it. And there were probably just as many or more trades from 9:30 on as what I showed you there. So it's just so many trades, it's not hardly worth talking about. But I'm just going to let you look at my chart, and we'll back out just a little bit and ease through it one more time, just so you can compare what I had. You can see my short term. This was a spike in channel. This was a channel down. Let me just back up to where I stopped at. You finally get a break here, so you're going to probably try to move to a new low, but it doesn't get it. But you got a little channel working down, a break, two legs to a new low. And then this was like a spike in channel up. There's actually a short term trend line right up through there, but this is a spike and it goes into a channel and then it just sells off. You don't even, you actually do get a close outside and two legs up, and then it moves down. Then you get another little short term channel here, gets a break, close outside, two legs down, then you got one going up. And all of these played out pretty well. This one right here, you don't really get a close outside before you get a new high, but you try to go higher twice, so you had a nice short right there. It is right into that support and resistance, so you may wait and you get another chance here and even here. And so again, you got another little channel working down. You get a close outside, a move to a new low, and it reverses. And then going into the 2 o'clock hour, this is just straight up in a nice tight little channel. And so it was a really good trading day. Again, one thing you need to be careful of is that on a day with this kind of volatility, they could raise the margins, they can have trading halts. There's a lot of things that can trip you up, even if you get it right. Let's say you're in this trend and suddenly they halt trading right here. I'm not saying they did, but just let's just say for assumptions, and they stop trading right here and you're long. Well, suddenly when it opens up, the bottom falls out of it, and you could get burned here really quickly because you couldn't get out of that trade when the market halted. And so it could be much worse. You could have been short down here and then it went long and you get stuck. And so instead of losing your typical 8 ticks, you might get stuck with some slippage or something, and you might lose 5 points before you can get out. So there's things like that happen, or they could have a margin increase and suddenly your broker says, hey, you don't have enough margin, because we've doubled or tripled the margin, and they automatically close your trade. And so you may have, just a lot of things can happen to you in a volatile market like this. So you got to be very careful. So just remember that. For the average trader, it's probably better to sit on the sidelines, especially when it starts doing stuff like this, just up and down, up and down. And just sim trade it, get the practice, get the experience with this kind of market, but it can be dangerous. So just be aware of that. Don't let it lull you to sleep and then something crazy happen and you not realize those kind of things can happen and get yourself in trouble. So, but yes, they can suddenly, because of volatility, they can, there's certain certain percentage moves that they halt trading. So, especially if it's going down, if it moves so far, they'll halt trading because they don't want the market to get spooked. And, there are protections for a reason in there. And whether you agree with them or think they're fair or right or whatever, they're there to protect the market from huge sell-offs and, just disasters, stock market disasters. So they're there for a reason, and they could come about if we get a big enough move. And they can also decide that the market's so volatile that They can't afford for people to get wiped out and not have enough money in their account, so they increase the margin. And those kind of things can trip you up, especially if you're not aware that they do those kind of things. So just be aware of that. Most of you probably already know that, but I'm sure there's probably some listeners watching the video that don't know those things. So make yourself aware of them. Make sure you understand the basics of futures before you jump in with real money. The one good thing about day trading is that you can't, if you're trading the daily charts, and the market closes at, let's just say it closed here at 2670, and then tomorrow, and then you're asleep in bed at night and it opens back up and it gaps down and it opens back up at 2610. Well, you're liable for all that loss, and you'll probably instantly get stopped out. You'll have a margin call, and next thing you know, your broker's looking for you to send them a big check, and you never dream you could lose that kind of money. But it can happen. But as day traders, as long as you got your safety stop in, you're going to get stopped out, even if there's a little bit of slippage. So there's a less chance of having those big, huge moves. So that's why the margin is cheaper for day traders. So just keep that in mind. And so day trading is really a little bit safer than trading the daily charts and going to bed overnight and something crazy happening in the middle of the night, and then the regular session opening back up. But that's a good thing about the 24-hour trading now, is that you really don't have to worry about that even in the mini S&P, because we trade 24 hours. There's only like a 15-minute close period every afternoon during the week. But the thing is, you get these crazy moves during the overnight. Just like this, look how far we traded down overnight, but by the time we opened back up, we were right back where we closed yesterday. And so you get these crazy moves because there's a whole lot less volume, and it's easier to move the market, and there's people that can move it and do move it for specific reasons. So just keep that in mind. So I'm going to wrap it up. I hope you had a good trading day today. If you're not comfortable with this volatility, then by all means don't force it. Just sit on the sidelines. It'll start to slow down again and get back to normal. I mean, this movement's nice in some aspects, but it's scary in other aspects, even for experienced traders. So don't underestimate it, and don't get lulled to sleep, or don't let something crazy happen to you. I beat that horse to death, so I'm going to end it here. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.